Hey traders, this is Blake Morrow, and I'm so excited to have here it's been a long time. It's been way too long. I have Dirk Friczewsky, and he's an independent trader and analyst. Dirk, how are you? It's been forever and a day. It's been over a year.
Yeah, quite some time, Blake. Thanks a lot for having me on again. And of course, hopefully everybody can hear me clearly and everything is perfect right now.
You sound great, and I'll tell you, Dirk, it's funny. We haven't talked in about a year, and it's been way too long, and it's totally my fault. But last year when we interviewed and I interviewed you, the title of the interview was "The Euro Dollar Will Remain Bearish Based on Rate Differentials." Now, I know we're going to talk a little bit about the euro, but it's funny because I was telling you as we were starting, we could probably use that same title uh, today. But I'm love to hear your views about the euro, the ECB, the Fed, and what your views are here. But I know you at first you really wanted to discuss another topic. What's on your mind right now?
Well, we just spoke before that recording, of course. We just spoke about that kind of a topic with just two letters, the trending topic, and it's, I think, more than a trend, AI, so artificial intelligence. So you put that up like this Google Trend stuff over the course of a couple of years, and that even if you check that out over the course of the last month, whatever, AI is on everybody's mind and out there, the financial markets, especially if you check out the last 3 to 6 month performances, the US indices or other markets as well. Everywhere you look, you have that topic of AI. So what does it have to do with currency markets? What does it have to do with the economy? And well, it has to do a lot. If you just check out all these economists from Goldman Sachs, JP Morgan, and Germans like the Deutsche Bank, or even some other smaller banks, they all are giving you something like a hint that economy might be growing just with the help of AI. And if you put that into some numbers, Goldman Sachs, for example, did, and others did as well, 0.4, 0.5% of the GDP of the US might be just pumped up by the help of AI in the next in the foreseeable future. So this has a lot of implications for the economy, for the GDP. And if you just compare that with the GDP of the Eurozone, or especially with other countries like China, this has a lot of implications on the kind of how economies are worth trading at a certain price level. Look at the current situation going into that macroeconomic stuff. The US is doing pretty well the last 12 months. Check out all this kind of GDP growth and just compare that with the Eurozone. If you just put into that some numbers, 2.4%, or even if you call it 2.1% growth in 24 by some forecasters. And you check that out for the Eurozone, and it's something like 0.7, 0.9% at a maximum. If you check out that current forecast for Germany, it's really crying. It's really makes me cry. We had that leading German economic forecasters, research institutes here, and they made something like a common research paper, so the so-called spring paper. And spring 24, they had something like a revision of 1.2% to the downside. So the German economy might be only growing 0.1%. It's a tragedy. And if you compare that with 2.4 or 2.1%, whatever you name it, it's just very clear that there is something going on, especially going on in the US.
You know, it's interesting, Dirk. I look at your markets. Like the German DAX it sticks out, like a sore thumb, because I'm viewing it every day, and not only the German DAX, but I'm looking at all other equity markets around the globe. With Germany in such dire straits, or you might be crying in your own words. What is powering the German DAX higher right now? The expectations that the ECB is going to be looser than the Fed, and they're going to start cutting rates. Is that what's keeping the markets higher?
Well, I should say it's a couple of things, of course. As you know, it's not only one thing. You're right. I think there is something like a pricing in that so-called rate cut expectations. And right now they do something like expecting a rate cut in the next 3 to 6 to 9 months, or in direction spring 25. Right now we are well above 4%, you know, and we could go down to 2.15%. So that's a lot of room to the downside, and it's more than just the room the Fed is maybe giving you a hint about all these probabilities. Fed Watch tool, wherever you can check that out. It's not that much, so that interest rate scissors, they are widening between the euro and the US dollar in the next quarters to come. And I think this is kind of a happiness for some investors, for the German DAX investors and the 40 DAX companies. And of course, you get to face the facts that the German DAX is not the German economy. These are the biggest German listed companies, and they are well diversified within a couple of countries worldwide, production spread all over the place, human resources spread all over the place. And sadly, a lot of investors from outside and not from Germany, they are earning the 50, 52, 53 billions of dividends this year. And so this is a most important thing here. Well diversified, and they're diversified away from the German economic situation regarding energy costs, regarding maybe issues all the Western industries have, human resources problems. A lot of people are going into the direction retirement, and maybe on top AI will help out a little bit where it is possible, but it won't be the solution for everything, of course. You know, all these white collar jobs maybe, but tell a plumber or a baker AI is going to reproduce that stuff. What do you do? It's not working, of course.
Right. So
I think it's all this stuff together.
Okay. Well, you've kind of, you've talked about the German economy, but let's talk a little bit about the ECB and where you feel the euro dollar and where it's currently trading, and what's going to be the difference between the ECB and the FOMC. I mean, we have the euro that's trading, it's struggling to get back above 110, but then again, it's holding up pretty well based on the expectations that the Eurozone or the ECB might actually cut rates before the Fed. What do you feel is the trade right now in the euro? Are you bullish euros? You bearish euros? How do you feel about the euro?
Well, if you just check out, maybe I could spread that screen right here.
Go ahead. Yes, please do. So, Dirk, let us know what how you're seeing the euro right now. I'd love to get your views.
The thing I prepared for today, and of course I use that longer term chart for a couple of presentations as well, is just the reason where we are, where we have been. And so we worked with that Fibonacci retracements here. You see a longer term Fibonacci retracement. That's the yellow one from that September 28 low of 2022. So that's in the middle of that energy crisis. And then, of course, things got better and better again. And going back up to that summer high at July 18, 23 at 112.76. So just to explain where the yellow lines are coming from. So you have a little bit of different Fibonacci retracements, longer term or the shorter term views. And if you just see a little bit of the clusters, and that's where I put the green and the red boxes, is just something to show you guys where the targets are possibly, where the market could possibly run into and get back down to. So just to explain, the green box is just a kickback in the direction of that 109 level, close to that 109 level back up. And the level down there is the level of, well, it's a mixed level of that cluster zone of 102. So just to be, just to inform you guys out there, of course, is the 102 level. Funny thing is something the city guys called out as a target for the next 6 to 12 months. So very interesting where they got this from. Maybe they simply checked the fibs as well. And the reason why I'm just favoring a little bit more to the downside is the reason that the ECB might cut rates way more than the Fed does. You can check that out if you simply add things like money markets, European markets, or ECB rate cuts, whatever. A lot of stories come up, and the ECB might cut rates into the spring, as we spoke about that, into direction 2.5% possibly. And if you just check out the Fed Watch tool, you see the probabilities. So the markets are pricing in something like a Fed rate cut of 75 basis points, or at the most at 1% into spring 25. So it's a bigger jump for the ECB. So the interest rate scissors, they are widening again, and this might lead to the conclusion that the euro is a little bit more weakening. And we all know from the construction of the Forex markets, the dollar, the greenback, is the bigger part. Besides, ECB is of course not only a central bank for one country. It's not that easy as the US boys are doing that, just with having one single currency and one single country. So a lot of people are discussing and debating here in Frankfurt, and so they probably have to cut rates more because they have to do something regarding financing. Credits are too expensive, and they need to do something to, let's say, pump up the economy a little bit more.
You know, Dirk, it is difficult. I always thought it would be a difficult task with the ECB, as they're trying to be one central bank for so many different countries, so many different economies. It definitely is a struggle for them trying to accommodate everybody, because if you accommodate one country, or maybe more of the powerhouse like Germany, it's gonna really segregate some of the other countries, maybe like in Italy or Greece, or vice versa. It's a really tough job that the ECB has.
Yeah, on top of that, it's if you just compare the ECB, or try to compare the ECB with the Fed, or let's say to combine that kind of economic policies they do, comparing that to the US, there's a big difference. Of course, it's still written on the paper. We got this so-called Maastricht Treaty, and we got this so-called deficit quotes of 3% in relation to that GDP. So we are officially not allowed to dive sub 3% deficit. Of course, a lot of countries do that. Look at France, look at Italy. Of course, Greece is in the same space. But Germany is still doing pretty well if you just look at the deficits, because we are simply saving and saving and saving. But what we are saving for? I mean, we need to invest something. We need to invest more. And we got something like a so-called debt break. So we try to avoid to have something like too much debt. It's not the way possibly it works in the next 6 to 12 months. And especially we need to invest in a lot of stuff, not only supplying ammo in directions Ukraine or whatever. No, it's about the infrastructure. It's about future projects. It's about everything. So this is something which keeps the economy running. And I think they need to pay more, and they need to take on more debt in the next month to come, and maybe to reform that kind of a debt break here in Germany. And this will have a couple of implications for the Eurozone as a whole as well, I think.
Well, Dirk, I want to say it's always a pleasure to get your views about the markets, and about AI as well, and how you think it might shape the landscape of the financial industry. So you manage some money. You're a risk manager. You're a trader. What do you feel is like the best trade near term for you? I mean, maybe short some euros, or is there any other place that you might say, this is where I really want to be over the next, let's just say over the next month, a couple months?
Well, right now, if the so-called, let's say, the thing is, the WIX is just something like an indicator for me for markets, and the WIX is going to be lower and lower and lower, and usually this is something like if the WIX is high, it's time to buy. But check out the current situation. So it is not a perfect invitation for me right now to invest in new positions. So I simply stick to the plan, leave my positions. I try to secure the positions because I'm really think that we will have something like a correction, because everything is quite overheated, especially our German DAX here. But if you looked at the longer term, the 6 month, especially since October, US markets had a run. This kind of a rally is massive, and of course it's supported by AI and the Magnificent Seven and whatever you call it. I think everybody, maybe me as well, is waiting for a little bit of a correction to step back in again and to have a chance to get in somewhere a little bit more cheaper. And it looks like FOMO is around everywhere.
Yeah. And it is. I agree with you. And I'm going to just put some words in your mouth. You said, if the VIX is high, it's time to buy. So if the VIX is low, it's time to go.
To go slow.
Well, Dirk, I appreciate your professionalism and your knowledge here at the Trader Summit, and I'm sure other traders do as well. So you tend to tweet, or on X now, since it's changed names since the last time we met. You tend to voice your thoughts early in the morning when I'm usually asleep. I'm fast asleep when you're out there active. But how do traders get to follow your work? What's the best way to follow you?
Well, it's quite easy to just follow me on X. Recently, I would simply say I was a little bit more lazy, not posting everything. If it comes to Euro-US-dollar, for example, especially to my favorite trading part, I would simply say or simply recommend, if you're not the day trader, if you're not the scalper guy, whatever, and if you're more into swing trading or position trading, you saw my charts, you saw that daily chart, for example, and you saw that RSI at the low here in the screen. And you saw a couple of lines like EMA 100 and EMA 200. And of course, a lot of things are not as easy as they might be, but the rest of it is no rocket science. Check out the EMA 100 or EMA 200. And as you just check that out, the average and the current 108, where we're heading around sub 108 right now. Right now, it's simply really flat. It's not very easy to get into a new trade. Be patient. Wait something like a day where the Euro-US-dollar is maybe jumping up 1%. That's your invitation of the market, just to short the Euro-US-dollar again. That's how I do it. And if you're not into a one trade setup or do something like a position trading, just use days like these to build a position in the Euro-US-dollar in the longer term short position. So that's my favorite position. If I see anything in direction 109 and 1 to 10, that's a new invitation for a short for me. And the farther the current rate is away from the EMA 200, the more it is an invitation for me to go short. And just check out the current numbers. We are right now in the middle, absolutely in the middle of that 104.47 to 111.39. So we are right in the middle of that, right in the average. So it's not easy to jump in today, but as I told you, be patient and just wait for a bounce and short it.
Dirk, I appreciate it. And I'm sure traders at the Trader Summit do as well. I want to thank you so much for joining us. And it will not be a year before the next time we speak. I will definitely be reaching out to you. I'll be reaching out to you way before that. And thank you for spending your time. I hope you have a great holiday weekend yourself. And we'll catch you on the next time here at Trader Summit.
Happy Easter, Blake. Happy Easter to you guys out there. And thanks for having me on again. Thanks,
Happy
Blake.
Easter to you as well. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.